So, Peter, thanks for joining us virtually, of course. The bank has today announced a quarterly update, which is for the June quarter, which obviously preceded the lockdowns we're currently going through. But perhaps you can talk us through what the numbers tell you about how the bank is travelling as the nation confronts these challenges.
Well, hello, Michael, and great to be speaking with you again. In relation to the Pillar 3 this week, it's really a balance sheet report. And the balance sheet's in good shape. If I look at capital, our CET1 ratio was 12%. And if we allow for the announced but not settled asset sales, it's pro forming at 12.5%, which is well above the 10.5% APRA requirement. If I look at funding and liquidity, deposit to loan ratio at 80%, LCR and NSFR well above 100%. So again, liquidity is in pretty good shape. And then credit, in terms of credit, delinquencies in mortgages were down, as well as in business lending, the stress ratios improved in the quarter.
So if we turn to COVID and the lockdowns, what are customers telling you in terms of impacts, and what sort of support has the bank provided to date in terms of loan repayment deferrals, etc.?
Well, in relation to customers, I'd just say if you're listening and you've got any troubles, please call us early. We've again reinstated deferrals, and they come through our hardship processes. We've got some other new initiatives such as 45-day interest-free overdrafts for business customers. But the core message there is if you've got any difficulties, please call us, and I'd encourage you to call us early. In relation to what we're seeing, we are seeing a little bit of stress in the business portfolio, but not a lot. And certainly in mortgages, we've got 1.6 billion in terms of mortgages where people have asked for deferrals. So yes, it's up, but nowhere near what we were seeing in the first round of COVID, which was 55 billion at its peak.
And I know it's a dynamic situation, but what do you think this all means for provisioning and asset quality going forward?
Well, I think if we think about what's driving this, it's really the economy's been held back because activity's been depressed. So I'm certainly in the camp that activity will come back strongly when restrictions are reduced. And so what that will mean, I think, is from a credit quality perspective, more of the same. It'll be pretty good.
And just sticking with provisioning, the foreign finance issue, how is that being provisioned for? And is there any update, or have you gotten any further in terms of finding out or getting to the bottom of what went wrong?
Well, it's obviously disappointing that we've had that fraud or that alleged fraud. So very disappointing. But in terms of the quarter, we have fully provisioned for that exposure. So we've dealt with it in the quarter. I really can't say much more than that, Michael, because it's before the courts.
So turning to capital, we've obviously seen some of the other banks announce capital management in the last month or so, and I know it's difficult to talk too much about this ahead of the full year result, but perhaps you can give us a bit of an indication on how the board is thinking about this, given the bank's strong capital position.
Well, as we spoke about, for 12.5%, we are well above that 10.5 threshold that APRA sets. So we do have excess capital. The board will be looking at our full year results about what we do in terms of the dividend as usual, but also looking at a capital return.
And looking ahead, the economics team and the RBA as well are both expecting the economy to contract in the September quarter, but then bounce back pretty well later in the year and into 2022. I think you've already said that's basically what you're expecting, but longer term, how do you see the nation dealing with COVID going forward?
Well, Michael, I think we're, as we said, the economy's being held back at the moment with the restrictions. So as they ease, then we'll get more activity, and that'll be good for economic activity. But we've also got historically low interest rates in terms of the cost of debt in the economy, so that's good. We've got governments pumping in a lot of support, so again, that's good for the economy. And so longer term, if I think into 22 or maybe a little bit longer. Certainly, the domestic activity will pick up as we've got less restrictions domestically. And then once we get the vaccination rates up to the levels that the government has talked about, I think it's 80%, then international activity will increase. But so I'm confident that we will see see a bounce back in activity.
And just on vaccinations, there's a lot of discussion at the moment around employers and workplaces and how they deal with that. How is the bank approaching this issue?
We've encouraged our team to be vaccinated. So we've introduced paid leave to get vaccinated. We've got special leave after vaccination if people need it. But we're strongly encouraging our staff to get vaccinated. We're part of a pilot in terms of corporate sites, both in the 8 LGAs that have been locked down in Sydney, and also rapid testing we think will play a big role in helping us through the period ahead.
And yourself, have you had the first jab or perhaps both?
I've had both jabs, and I'm 2 weeks past my second jab, so I'm pretty immunised, I think, at this point.
And just lastly, turning to your priorities you laid out at the half-year result, are you pleased with the performance that's going on in mortgage lending and also business lending, but also asset sales?
Yeah, I think in terms of our focus in the perform piece, it was about growing in our core markets, which is mortgages and business lending in Australia. And I'm pleased that we wrote at system in both those loan classes this quarter. So that's in mortgages, it's consistently delivering now, and in business lending, it's a big improvement from what we've seen over the last 2 years. And then in simplify priority, the asset sales, the simplification of our business portfolio is our priority there, and that's progressing well. So we've made progress on life insurance, on general insurance, LMI. So there's a number there that we've managed to announce and looking forward to completing them.
Great. Thanks for joining us, Peter.
Thanks, Michael.